Welcome everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of December 18th through 22nd. With that, let's go ahead and start off with the markets. So the S&P 500 on the daily time frame here has clearly showed that the bullish momentum is still present and most likely still in control, and will be in control for the next couple of weeks into next year. I give you guys all the reasons why in the market summary of the newsletter, so make sure you guys read that first before you guys watch this technical analysis video. Now, last week, as you guys can see on this yellow arrow here, this candlestick was last Thursday's candlestick. And this is what I usually call a evening star doji candlestick. And from a textbook standpoint, this evening star doji candlestick tends to be a little bit shorter, as in the bottom wick here should be a little bit shorter, and the candlestick after that, which is the confirmation that this is indeed an evening star doji candlestick, tends to be a very bearish candlestick. So from a textbook standpoint, it's not really considered an evening star doji candlestick chart pattern here, but and there are signs that the market is trying to have an intermittent top, especially after last Friday's OPEX event. So obviously, ideally, from a textbook standpoint, last Friday should have been a more of a pullback, but the fact is, the bullish momentum is still very much alive, and we're still seeing increased volume as we continue to head up to the upside on the daily time frame. Even the average volume has increased, but most likely due to the fact that it was OPEX last Friday. But again, there is a chance that we can see a small pullback to at least retest the daily 10 SMA, and most likely at this point in time now, the daily 21 SMA, because we haven't retested the daily 21 ever since we broke over it on the early first week of November. So, at some point on the daily perspective here, we are getting a bit overextended based on the fact that the price has never retested the daily 21 SMA after rapidly moving away from it in early November. So, obviously the bullish fervor is still there. Again, I gave you guys all the reasons why in the newsletter, so make sure you guys read that first. And there is still a great probability and a great chance that the markets can still go all the way up to that 479.20 level that I gave you guys last week as well. So there's a good chance that we can, maybe even hit 480, the whole number level of 480 before we officially top out. But again, I give you guys all the reasons why we can even go further than that. And, from a technical standpoint, it might seem completely implausible, and, I might be saying some crazy things here at this point, but there is still a lot of room left for the markets to continue to move on higher. The only thing that we need to do in order to move higher is that we pull back and consolidate any large move up. So basically, we need to be able to consolidate last week's first half move here to the upside, and we need to absolutely, the key major point here for this week is to consolidate and move in a tight price range for this entirety of this week. And as we head into the last week of December, which should begin the Santa rally that everyone has been expecting for most of December, should begin. All right, and I even gave you guys the data for that last week's newsletter as well. Okay, so obviously it's in the market summary part of that newsletter as well. So SPY this week, if you do see a continuous pullback into the first retest of the daily 10 SMA after we lifted away from it from the first week, for the first few weeks of December, we should be seeing a retest around, at the very least, I would say around 464. And if we do decide to break below the daily 10 SMA, and again, we need to be seeing a break below the daily 10 in order to see our actual retest of the daily 21 SMA, we could be seeing a retest of the daily 21 SMA around, I would say 462 to 461, right? And again, my SMAs move a lot slower compared to EMAs, the exponential moving averages. So this is kind of my speculative prediction as to where my 10 and 21 SMAs will be ending up if we do see the price coming back down to retest both of these two momentum SMAs. Okay. Now, obviously, if you guys have been looking at the entire tech sector, the tech market, NASDAQ was a lot stronger compared to the overall markets, and it was able to uphold the entire broader market, which is the reason why I believe that SPY wasn't able to have a solid bearish candlestick to the downside on Friday, as a bunch of, well, it was a record amount of contracts and options expiring at the same time on Friday. So, you know, it was pretty interesting to see that the tech sector and the overall tech market was completely holding up the S&P 500, even with OPEX, occurring. So, you know, the S&P 500, again, if we do see weakness, okay, I will expect NASDAQ to do a lot better performance-wise in this new trading week because, again, leaders lead, right? And even if the market is moving to the downside, NASDAQ will also be leading the markets to the downside as well, not just to the upside as we're seeing now. Okay, so with that, let's take a look at our first ticker for the week. So Amazon, this is our first swing trade idea. I mean, we've already been in this one since last week, so make sure you guys check the Discord chat room. But Amazon has been making a very tight, coiled bull flag here compared to the other mega cap stocks. This one has been consolidating very, very well, and thanks to this nice bullish flag here on the daily time frame, we're able to pop out of that horizontal flag resistance sitting around 148.50 or specifically 148.60. Now, we were able to fortunately close over this resistance level, and we even were able to create a new and print a new high of the week last week at 150.57. So I love the fact that last Friday's candlestick was able to move higher than the previous highs on Thursday's candlestick here at 150.54. So only really a 3-cent difference, but that tells me that bulls are here and are ready to break this name out from this nice bull flag chart pattern. Now, if you go on the weekly time frame now, if you go even higher on the time frame here, okay, we are currently sitting over a very major level of resistance on the weekly time frame. If you guys take a look in the past here, okay, so back in 2020, late 2022, most of 2021 here, this specific area, so somewhere around, I would say 144 to 148.50 was a huge area of support and demand. And unfortunately, that turned into a huge area of supply. And the fact that is, the fact is currently we're able to return this original demand area back into an actual demand area again, right? And so now we've turned this entire area of 144 to 148.50 from a demand area to supply area and back into a demand area, as we have completely just took out any shorts, okay, any sellers that were in between this 144 to 148.50 supply area. So this is a very good shift in the momentum as well for the long term and the short term perspective. So On the weekly time frame, from a bigger standpoint, bigger perspective here, and bigger trend wise here, Amazon definitely has a lot of room to continue to slide up higher, drift up higher until we reach the next major level of resistance that is sitting at 158.70, or if you guys just want to keep it simple, 159 as a whole number level. But at this resistance level, there is another supply area that we will be reaching, and that is right in between 158.70 or 159 if you guys want to use the whole number as well, 159 to 177.50. So this is a huge price range, all right, but this is a very large supply area. So I would think that there's going to be a pretty hard time for the bulls to try to get over this 158.70 or 159 whole number level, and that is the reason why this will be our maximum profit target for this swing that we currently have. Now, if you guys did not get in last Friday with us, there's a great chance that you can get another entry point tomorrow on Monday. And if you guys want a very simple and confirmed breakout entry to the upside, a long entry over 150.55 will be pretty good, and it will be prudent for you guys to continue to hold until we hit 158.70 or 159 as the whole number level. Now, obviously, if you guys want to get in with an earlier entry point, but at the same time a lot riskier entry point, 148.60 will be a great bounce entry as well. All right, so that's it for Amazon here. Our second name here is HTHT. So I want to start this off on the weekly time frame. So I wrote a lot about this this stock in the newsletter, so make sure you guys take a look at it. But on a technical standpoint, this looks like a pretty textbook short. And here's the reason why. So first of all, on the weekly time frame, we have been making a very nice descending triangle. And descending triangle chart patterns are inherently bearish, right? And every single time a descending triangle forms, we tend to see a lot of retests on the actual horizontal support that consists of that makes up the overall descending triangle chart pattern. And for this name, 33.73 is that specific horizontal support level. And so far, we have retested this specific demand area or demand level 3 times. And if you guys know the golden 3-touch rule, we tend to get a breakout on the third retest, or from a more realistic perspective, we tend to get that breakout on the fourth retest. So this week, on this new week's weekly candlestick, I expect to see a fourth retest that facilitates the actual breakout to the downside below 33.70. And once we break below 33.70, there isn't a lot of support left after this, all right? Because the next major level support is currently at $25. And this has been a major magnet level in the past whenever we broke below this 33.73 level, or if you guys just want to use whole number levels, 33 or 34. All right, so depending on where you're looking at, 34 might have been the level where the price broke to the downside, or 33 may have been the official whole number level that brought out the breakdown to the downside. Now, again, this $25 level has been a huge magnet level whenever we broke below this 33.73 level, or again, 34 or 33 if you guys are using whole number levels. And so it makes sense that history repeats itself, especially in the stock market, and price never forgets levels, right? So it will be pretty interesting to see, especially as a short during this overall bull market, that this Chinese name breaks to the downside and continues to move to the downside until we get the official retest of $25 before we see yet again another large pivot, as we've recently seen back in late 2022. Okay, so with HTHT here, as long as we're able to get a very low risk entry point right underneath 33.70 and we see increasing selling volume, we should be having a very easy trade to the downside where we can just set it and forget it, right? So again, last week's candlestick, this looks pretty bearish, right? We have a very nice top wick here, and the fact that we have continuously rejected at this descending resistance trendline, which again makes up that overall macro descending triangle chart pattern. And on top of that, we have continuously rejected and stayed below the weekly 10 SMA, especially after we saw that bearish crossover right here with the the weekly 10 and the weekly 21 SMA. Okay, so right over here, right? So at some point, I'm also going to be expecting a death cross to form with the weekly 50 here and the weekly 200 SMA. So that will solidify the long-term bearishness that this name is currently on, right? Because again, we've been moving to the downside for, well, most of this year, right? Okay, so with that in mind, let's take a look at our third name for this week. So this is CVX, a major oil related name. So first of all, I want to look at crude oil prices, right? Crude oil futures specifically. So crude oil ended up with a nice hammer candlestick on the weekly time frame. Plus, it ended up right at that weekly 200 SMA. Now, if you look at this specific area, there's something to learn here, right? We have a lot of things to learn here about crude oil. So for most of this year, whenever we retested this weekly 200 SMA, we tended to bounce, right? We tended to bounce. We pivoted away from the weekly 200 SMA, no matter how many times we came back down to retest it. So, if we kind of apply the same rules that occurred here to over here, then we can clearly say from a logical standpoint and from a technical standpoint here that crude oil can definitely bounce and rapidly move away from this weekly 200 SMA, right? We've done that twice here. Okay, the first one was over here, and the second one was over here. So obviously, I'm looking for more of the first scenario here. And if we do decide to hold over the weekly 200 SMA this week, then I would want to see a candlestick that kind of looks like this and kind of resembles like this, this bullish, very, very bullish candlestick. And if we're able to break over $72 here, or specifically 72.30 on crude oil futures, then there's a great chance we can rapidly move up and retest the daily 10 SMA, which is currently playing catch up here. And that's exactly what occurred back here in this first scenario where we retested and pivoted away from the weekly 200 SMA until we retested the weekly 10 SMA. Right? So there's a lot of similarities here to this first scenario. So ideally, we will want to see this first scenario playing out for this week. Okay, so if we translate what we just learned here on the crude oil futures weekly time frame, and if we go back to CVX, okay, CVX has been showing a very nice base chart pattern between 141 to 146.50, or specifically 146.60 if you guys don't want to use that whole number level of 146.50. So last week, okay, now if we go back on the daily time frame, we're able to break out from this very nice textbook base at this demand area between 141 to 146.50, and we're able to hold and close over this 146.50 resistance level last Friday. But on top of that, we're able to form a very nice inside day candlestick, and that's very indicative of a continuation that this specific current short-term trend is going to continue. And what is that short-term trend right now? An uptrend, right? We broke out of this major resistance level on the daily and weekly time frames. And so ideally, what I would want to see on this name for this week is we make yet again another tight, small price range inside day candlestick as we continue to basically tighten up right underneath this daily 50 SMA. And while that is happening, the daily 10 SMA will continue to catch up. And once we actually see a retest of the daily 10 SMA, we can see a huge launch to the upside and we can have a great vertical move to the upside, breaking over that daily 50 SMA that we were consolidating underneath for quite some time. And then we'll be able to reach our first major target for this name at 152.20. Now, I gave you guys an explanation as to why I think 152.20 might just be the maximum target as well. But I want to go over it again here. So this 152.20 level is right in between this large gap down that we saw from earnings, right? So there is a huge area of supply that we need to get out of if we need to, or if you want to, especially if you want to break over 152.20 and head on up higher. So this huge supply area is going to be definitely a hard area to break out of. But if the bulls are serious here, if we do see crude oil continuously moving to the upside, then we can rapidly start moving higher at the very least, ideally, half of this new trading week and continuously move on up higher for the last half of this week as well. So again, this inside day candlestick is very, very good to see. That means we're seeing constructive price action as we head on up higher. And the only thing that we want to see is continuous higher highs and higher lows, which clearly indicates that bulls are fully in control and all the short sellers or whoever have been short, especially after earnings here, are being taken out, right? That's basically what the price is going to be telling us if we continue to move on up higher as we get closer and closer to this 152.20 level and right smack in the middle of this gap down area. All right. And so our last name here is CVS. So CVS, it's a part of the defensive sector, the healthcare sector, and CVS has been pretty much range trading. If you guys take a look at the weekly time frame, it's making a very, very nice base, just like what we saw on CVX. But CVS has been making a large base since earlier this year. And basically, based on last Friday's closing price, this name really hasn't gone anywhere for most of this year. And so I would expect this one to eventually break out of this massive macro base in between 64.50, which I want to mark it as green here, and 75.50, which is the major level of resistance of this macro base chart pattern. Now, obviously, if you guys don't want to use the whole number level, and if you guys want to be a bit more specific, 75.60 is the level to be looking at, and also it's our entry point. So this week, I would preferably like to see CVS consolidating tightly, just like what I want to see on CVX on the daily time frame. But on CVS here, this is the weekly time frame that we're talking about. So for CVS, this name for sure, we want to be watching for the next 2 to 3 weeks. And the reason why I say that is, well, if you take a look at this specific area here, it looks very similar to what we're currently experiencing now. And this is where we start to consolidate right underneath that 75.50 whole number level. But we got some very bad news on CVS, which is the reason why we had this massive impulsive move down. But the one major difference that we are faced with here currently is that the price is now officially retesting and staying over the weekly 50 SMA. And back then here, we weren't even close to the weekly 50 SMA. And the 50 SMA was still trying to catch up to the price. So eventually, what happened here is that there was a major positive catalyst that allowed the price to impulsively jump up higher, allowing the price to actually catch up to the weekly 50 SMA compared to the other way around, where the 50 SMA would have caught up to the price eventually. But thanks to the catalyst, the price was able to catch up to the weekly 50 SMA first. All right, so again, I really want to see very tight consolidation. Ideally, I would want an inside week next week, or even just this week. But again, from a textbook standpoint, I would really want to see at least 2 to 3 weeks of consolidation before we see that major breakout over 75.60, giving us that second leg up higher, and eventually back to the 80s, where the weekly 200 SMA here is going to be retested. Okay, so eventually, long term, CVS, I want to see $80 and up, right? So as long as we're able to consolidate again for the next 2 to 3 weeks, simultaneously staying over at the weekly 50 SMA, we should be good. All right, so CVS, make sure you guys have an alert set up for all of our names, including CVS, especially CVS, since this is kind of more of a watch for the next couple of weeks. All right, so that is it for this week, right? The 2023 holiday season is about to peak as we head into the end of the year. So let's make sure we end it strong. All right, so make sure to like this video if you guys learned something, and most importantly, subscribe if you haven't yet. Thank you so much for listening, and I'll see you all next week.